Do you know the date that Ethereum is likely to go above $3,000 per coin? Well, I have a piece of technical analysis that's going to give you a precise date. And today I'm going to show you why and then how you can work it out for yourself. So if you like today's content, like, subscribe, hit the bell notification. Let's dive straight into Ethereum. So it's really important to know a couple of things. The technical analysis that I do relies heavily on human psychology, and markets tend to move in fives, so 1, 2, 3, 4, fives, and typical corrections of threes. But then what tends to happen after a three-wave correction is a continuation. And we're going to use that information today with some Fibonacci ratios. I'm going to break it down for you. By the way, early next week, I'm going to be launching my new masterclass. So everything that I covered today, I'm going to be teaching you in my masterclass early next week. So make sure you subscribe to the channel to get early notification. So what we're looking at with Ethereum, first of all, right, we're talking about $3,000. But quick caveat is that we're likely to see Ethereum, first of all, drop towards $1,200 to $1,100. Why? Because markets tend to correct in three waves. And with Ethereum so far, we've only had this first leg down. We've had, it's called a correction to the correction, called a wave B. So anticipate one more leg down. Really, really important. By when? Well, I've projected a date based on a couple of factors. By or before the 24th of September. But if this unfolds like this, what will typically occur next is the next expansion wave. And I want to really, really get this clear because it's going to blow your mind how accurate this can be. So when we're looking at this, I'm just going to draw it out like so. This tends to be, no, that's not what we want. We want this, a wave one. Right, in fact, sorry, let me just make the text a bit bigger. That's what I was looking for. There we go. All right, so when you're doing wave counts, I'm going to go into a bit of detail today because there's method to the madness. And Arthur C. Clarke said it best: any advanced science that is advanced, or science or technology, is indistinguishable from magic. And sometimes this looks like you got a crystal ball because these ratios are really, really accurate more often than not. But the method is, when you're doing a 5-wave count, 1, 2, 3, 4, 5, there's always a wave count above. And the wave count above tends to be, if it's the first 5 wave to the upside, it tends to be a wave 1. Then there's a wave count to the downside, A, B, C. The wave count above that is a wave 2. All right, this will make sense to you what I'm going to cover next. It's a wave 2. So what comes after a wave 2 is typically a wave 3. These tend to be the most impulsive, most aggressive waves. What's a good example of it? Well, we see it right here on the chart. If we look at this market over here, down here is also a wave 1 on a more of a micro scale. Then we've had this correction of a wave 2. And then the most impulsive wave tends to be the next wave, which is this wave 3 structure over here. So the next wave 3 tends to be a bigger degree wave 3 because this is the wave 1, right? This is the wave 1. Really, really reliable, really, really consistent. And what we're going to do, we're going to do some Fibonacci price and some Fibonacci time today. Literally measuring time. When is the next wave likely to end and at what price? It's going to blow your mind, right? Because it's so common. In fact, I'm going to show it to you like this. Let me show it to you like this because some people find it difficult to get their head around. I'm going to show it to you like this. Right, I'm going to use this as an example, right? Because this is what's going to more than likely happen in the very near future and how we can really project in advance what's likely to occur. So obviously we know what's happened. I've just taken the data back a little bit. Is the ratio that we're going to use something called 1.618. It's a Fibonacci ratio. It shows up in nature time and time again. But with buying and selling behavior, look at this, 1.618, right? So what we simply did there, and we're going to do it again in a second for the next expansion of the market, is we measured the distance that this price movement was. We projected it at the end of the correction, and we projected it forward. And if I just show it to you like this, it will make it even clearer. 100% is basically this movement projected from here. We can see this red line over here. That's 100%. We add another 62%. This golden mean, this particular ratio that shows up in nature, especially in the markets, is the 1.618. But look at this, like a magnet, like the buying behavior. You just see this time and time again. It literally tags 1.618 and then it starts to do a correction. Right? Then we call it a wave 4 correction. And there's a few other different ratios for wave 4s. I won't cover them today. And then we get wave 5, and there's wave 5 ratios. So why I'm showing you this is that's what we just did there. We're going to do the exact same thing again, but on a more macro degree, right? And what I mean by macro is now, rather than this being the wave 1, this whole sequence is the wave 1. So we're going to be able to do some price projections. So the price ratios, and then we're going to do some time ratios. I'm going to break that down for you as well, because it's going to be so powerful. It's often the missing piece to most people's trade plans is being able to measure time ratios and when events are likely to occur and why. So what I've simply done here in exactly the same way is I've measured this price movement. Okay, I don't know the information yet. I had to guess that this is going to be the end of a wave 2. That's not occurred yet. So we're just taking that with a pinch of salt. Then we project it forward, and then we add 62%. And this is where it's just above $3,000 per Ethereum. That's literally the next price target. There's 2 particular ratios that you want to be aware of. 1.618 is what we're looking at, is the most common. And then there's something called an overextension. It's quite common in crypto, fear of missing out. When people see the market take off, especially if it breaks a recent high as well, it will tend to overextend. And the next overextension is the 4,000 level, 4,230 level. And we want to be aware of those 2 ratios. But what I want to focus on today really is the date, right? It's like, okay, if it unfolds like this, when are we likely to see the bottom? And when are we likely to see the next wave 3 top? And we can actually project in advance the date and the time it will normally take. Again, as the market gives us more information, we can get a bit more pinpoint accuracy. But right now, looking ahead of time, I'm going to show you this. It's going to blow your mind, right? But we'll keep a close eye on this because we're forecasting right now. I know some people hate forecasting, some people love it. I trade, so there's practical trading. Forecasting is more just kind of getting a feel for what we expect to happen. And then how we can make money from the markets is where we trade it literally. Like right now, I'm only looking for short trades right now for Ethereum. So how did I get this date, right? This green line, I'll put it in a dotted line. How did I get this date of the 24th of September? Well, it's really simple. In fact, I'm going to show it to you like this. If I just get rid of all of the lines, so it's a nice clean chart. What I basically did was said from this point to this point, how long did this take? Not in price, but in time. How many days did it take? So I literally just measure it. And then if this is the top over here of this particular correction, and we're going to get a continuation to the downside, we literally take this and project it forward from here. And this will give us a date where this is likely to end. Because this particular wave is called a wave A, and this particular wave over here is called a wave C. They are related to each other. And more often than not, they're twins, right? What I mean by that is, in terms of time and price, they are often identical. Give or take, right? Give or take. It's not going to be like to the penny or to the cent, but give or take. And it gives us a good feel for the market. So that's how we got this particular date, right? So if I just show you this again. That's how we got this particular date for the 24th of September, right? This over here. We literally measured how long this took, projecting it from over here. This is not confirmed because we need a few different things, but there's good probability that this is going to be the top and we're going to see it come to the downside. But now we've got a price and a date. But now what I was speaking about was, all right, the wave 3 top. When is that typical? When does it typically occur? Well, just like we did with the wave A, I'm just going to show it to you like this because this will blow your mind, right? And especially when you see it happen time and time again with all crypto, not just Ethereum, is this movement to the upside from this low to this high. How long did it take? It's called a wave 1, right? So this is wave 1 because wave 1 and wave 3s are also related, right? So we measure it, right? We measure it. We say how much time did it take? And then we have to guess at the moment. We're going to use the date 24th of September when this leg to the downside, if it occurs, when it's going to end. And then we project this forward from this point over here. And there's 2 ratios that we want to be aware of. Most common is 100%. And then the next is 1.618. But as the market unfolds, then we'll get a bit more clarity. So now let's just do that. And I'm going to give you the date. You ready for the date? What do you think it is? By the way, if you're finding this useful, subscribe to the channel. I'm going to be bringing my masterclass early next week. That's going to show you how to do this in a bit more depth. momentum, pattern, price, and time. Today we're focused on pattern. We're doing some price as well, and we're really focusing on time ratios, because these ratios, it's often the missing piece to most people's trade plan, right? So let me just bring this back up. All right, so I've actually drawn it already, which is I've projected the date forward here. This is 100%, this line over here, and it's the 20th of November. So let's just summarize to make sure it's crystal clear. Now, this hasn't occurred yet. So just so we're on the same page, the next 2-3 weeks, sorry, not 2-3 weeks. What am I talking about? Where are we now? 2 weeks. All right, 14th of September. Next 2 weeks, the probability, right? We can only do probabilities, right? We're the casino and we can only play statistical probabilities, is sideways to down. So I'm only person looking for short positions on Ethereum for the next 2 weeks. There's a couple of other factors that we're not going over today. One of them is momentum, that just indicates, the probability is down. Doesn't mean it's going to happen. That's what it is. The information we don't have right now, because, we have to wait 2 weeks, if it's going to unfold like this. So we have to make an assumption, forecast, a bit of vision to say if it occurs like this and what's likely to occur next. It's almost like, this is what I think. And then you have to, how much you're going to place in your trade to find out if you're right. Normally 2% is a good amount. And then this is what we're anticipating as a minimum next wave 3 at this date. There's 2 last things I want to just cover, and then we'll wrap up. Is if it exceeds this date with confidence, the next date will tend to be the Christmas, bang on Christmas, right? But we have to wait for that information. And then the next price ratio, sometimes it just smashes through the price ratio. And I'm just gonna cover one last thing with regards to pattern position. If it smashes through this, then the next price ratio is 4,200, right? So this is what we want to be really, really aware of. And the way I would draw it, just to make it easier for myself, is to just draw a box. Say minimum date, minimum price, maximum date, maximum price. Then we go, okay, how do we know which one it's going to be? All right, so this is going to blow your mind, right? So remember, market's moving 5s and 3s. So like this, 1, 2, 3, 4, 5. And then we're expecting this wave 3. Well, guess how many waves a wave 3 has when you break it down? Well, more often than not is 5 waves. So what we're going to anticipate, and this will help us deduce nearer the time how it's likely to be, is more often than not, it'll be something like this, a 1, 2. And if it's like a 3 and a 4, at this point, we know it's going to have more than likely have one more leg to the upside, and then it'll be something like this. So there you have it. So the date you want to be aware of with Ethereum is right now, immediate 2 weeks, sideways to down, 1,200, 1,100 is the high probability between now and the 24th of September. We want to let the market unfold. And if it does do this, then we're likely to see a trend reversal. Again, we need some other information. And then if that takes off, the date is the 20th of November. As the market unfolds, we can get a bit more accurate. And then the pattern position as well. Woo! That was a lot. That was detailed, right? So let me know how you found that. So make sure you subscribe to the channel. Monday, early next week, I'm going to be launching my brand new masterclass. It's going to teach you how to do this stuff that we're talking about, really stacking the odds in your favor. So let's just finish with a quote from my book. We can actually download as well in the description link below. I'm going to go with chapter 3 today. Chapter 3. It is Confucius, right? A bit of wisdom to end today. It does not matter how slowly you go, as long as you do not stop. So we covered a lot of detail today, right? We really covered pattern in 2 degrees. We covered price. We covered mainly the extensions in terms of what the wave 3 is likely to go to. And then we also did some time ratios. That's a lot of information. So everything is difficult before it's easy. So it does not matter how slowly you go, as long as you do not stop. But look out for my masterclass coming out next week. I think you'll get massive value for it, and I'll see you there.